We're staring down the barrel of a trading week like no other, with over $7.49 billion in market cap set to report earnings. The megacaps are coming, and with them, the one moment that decides the week. Will it be a catalyst for a rally, or a harbinger of volatility? One thing's for sure, the stakes are higher than a $120 billion market swing. The whisper number on everyone's lips is EPS $2.95. Can the giants deliver? This week, the market's fate hangs precariously in the balance, and it all comes down to a single, pivotal moment. What will it be? Welcome to the week ahead, where geopolitics and earnings collide. As we dive into the market mood, it's hard to ignore the Houthi announcement of a Saudi naval blockade, which threatens to open a new front in the US-Iran conflict. Meanwhile, Spain's World Cup victory is a fleeting distraction from the chaos. But let's get real. Investors are more concerned about the $120 billion chip industry, which is expected to drive market movements this week. Alphabet's new AI chip roadmap is particularly noteworthy, as it could shake up the tech landscape. After a deadly weekend for U.S. troops, Trump's vow of revenge against Iran has raised the stakes. So, what's capping Monday's market? For starters, it's the Iran situation and those megacap earnings. The S&P 500 and Nasdaq rose last week, buoyed by a chips boost, but the real question is, can this momentum sustain? The bar is sky-high for Tesla's earnings, and options traders are eager to capitalize. But here's the thing. Despite 5 months of US-Iran tensions, oil prices haven't gone ballistic. They're still hovering around $70 per barrel. It's almost as if the market is waiting with bated breath for something to give. And then, of course, there's the elephant in the room, AMC shares. Could a movie, yes, a movie, be the catalyst that sends apes back into the market? It sounds far-fetched, but stranger things have happened. As we look ahead, one big question hangs over the week. Can the market shrug off geopolitical risks and focus on the fundamentals? Or will the Iran situation and other global events dictate the narrative? With earnings season in full swing and the likes of Tesla and Alphabet in the spotlight, this week promises to be a wild ride. So, buckle up and let's see what the market has in store. Tuesday's earnings are all about automobiles, with General Motors Co. taking center stage. As the company reports before the open, can it shift its revenue into high gear and hit the estimated $48.4 billion mark? One thing to watch, will GM's electric vehicle push start to pay off, or will it remain a costly detour? With earnings per share estimated at around $3.29, the pressure is on to deliver. After all, investors aren't just along for the ride, they're expecting a smooth journey to profitability. As the numbers come in, keep an eye on how GM's bottom line is fueled. Is it the traditional gas guzzlers or the newer, sleeker electric models that are driving growth? The answer will be crucial in determining whether GM can stay on course. And let's be honest, in the automotive world, reputation is everything, so a strong earnings report could be just what GM needs to put the pedal to the metal. With the bar set at $48.4 billion in revenue, anything less might be seen as a speed bump. Wednesday's earnings are shaping up to be a real thriller, folks, with some of the biggest names in the business taking the stage. Let's start with the telco titan, AT&T, which reports before the open. Can they finally tame that debt beast with $32.4 billion in revenue? One thing to watch, how they plan to juice up that top line. Meanwhile, IBM is also up early and with an estimated $17.9 billion in revenue. The question is, can they keep that mainframe cash cow mooing? Keep an eye on how they're positioning themselves for the cloud wars. Now, after the close, it's the main event, Alphabet Inc., the advertising juggernaut, with a whopping $120.4 billion in estimated revenue. That's a lot of ad dollars. But can they keep that EPS train rolling at $2.98? One thing to watch, any signs of slowing in that Google ad machine. And last but certainly not least, we have Tesla, also reporting after the close, with $26.2 billion in estimated revenue. That's a lot of electric cars. Can they finally turn a consistent profit with an estimated 51 cents in EPS? The one thing to watch: how they balance growth with those notoriously finicky margins. Thursday's earnings bonanza is all about the heavy hitters, with four industry giants weighing in before the open. Let's start with the telecom titans. Comcast Corp, expected to rake in $30.2 billion in revenue with earnings per share of around $1. Can they finally make their streaming services pay the bills? Meanwhile, T-Mobile US is looking at a whopping $23.4 billion in revenue and $2.65 in EPS. Will their 5G rollout keep them ahead of the pack? On the defense front, RTX Corp is poised to bring in $23.1 billion in revenue with $1.68 in EPS. The real question is, can they keep those lucrative government contracts flowing? And then there's Lockheed Martin, the biggest of them all, with a staggering $19.6 billion in revenue expected and a whopping $7.20 in EPS. But will their profit margins take a hit from rising production costs? Each of these companies has one thing to watch. For Comcast, it's all about those streaming numbers. For T-Mobile, it's the 5G subscriber growth. For RTX, it's the contract pipeline. And for Lockheed, it's the bottom line. Can they keep their massive profits intact? The stakes are high, with investors eager to see if these giants can deliver. Friday's earnings are all about the big guns, with ExxonMobil Corp kicking things off before the open. Can they hit that anticipated $99.60 billion in revenue and $3.67 in earnings per share? The real question is, will they be able to maintain their profit margins despite the energy landscape's constant flux? Meanwhile, Verizon Communications Inc. is also on deck, with estimates suggesting $36.20 billion in revenue and $1.30 in earnings per share. The key here is how they'll balance investment in 5G with keeping those EPS numbers on track. Then there's American Express Co., expected to bring in $19.90 billion in revenue and $4.45 in earnings per share. The one thing to watch is how their consumer spending trends are shaping up, especially given the current economic climate. With all these giants reporting, it's not just about the numbers. It's about the narrative they spin around them. Will they reinforce the market's optimism or sow some seeds of doubt? The market will be listening closely for any hints of what's to come, especially since these reports will set the tone for the week's close. Each of these companies has a lot at stake, and their performances could significantly influence investor sentiment going into the next week. This week, it's all about the titans of tech, telecom, and industry. The likes of Alphabet Inc., Comcast Corp., and Verizon Communications Inc. are set to report, giving us a glimpse into the health of the digital economy. But let's not forget the old guard. ExxonMobil Corp. And General Motors Co. are also on deck, and their numbers will tell us if the traditional sectors are still humming along. On the tech side, all eyes are on Tesla Inc., the electric vehicle pioneer that's been on a wild ride. Can they keep the momentum going? The bull case says yes, with a strong earnings season so far and a general sense of optimism in the air. But the bear case is lurking, waiting to pounce on any sign of weakness. What if the numbers don't quite add up? What if the growth isn't as strong as expected? That's the real risk this week. AT&T Inc. and T-Mobile US Inc. will also give us a snapshot of the telecom landscape, while RTX Corp., American Express Co., Lockheed Martin Corp., and International Business Machines Corp. will round out the week. It's a packed schedule, with nearly a dozen major companies reporting. So, what does it all mean? For one, it means we'll get a sense of whether the recent market momentum is sustainable. If the big boys can deliver, it could be a powerful catalyst for the rest of the year. On the other hand, if they stumble, it could be a major speed bump. The stakes are high, with billions of dollars on the line. Take ExxonMobil Corp., for example. They're expected to report revenues of around $90.85 billion. That's a huge number, but it's also a reminder of just how much is at play. General Motors Co. is expected to report EPS of around $1.47. Not bad, but can they keep it up? And then there's Tesla Inc., the wild card in all of this. They're expected to report revenues of around $23.14 billion. That's a big number, but it's also a reminder of just how much pressure they're under to perform. So, buckle up, it's going to be a wild ride. So, what's the main event? The moment that'll make or break the week. It all comes down to Alphabet Inc.'s earnings, dropping like a bombshell on Wednesday after the close. Why does it matter? Because when a giant like Alphabet speaks, the market listens, and its $7.49 billion in quarterly revenue is no small potatoes. The stakes are high, and the market's holding its breath. And that's a wrap. What a week ahead. Keep an eye on Alphabet Inc., ExxonMobil Corp., and General Motors Co. as they navigate earnings and sector shifts. This is not financial advice. Join us daily for bite-sized market insights and subscribe for more. Catch you in the next one.